Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news we no longer worry analysts about our household deleveraging risk. Firstly, in the US, however, the Fed's preferred measure of inflation hit its target 2% in September. In fact, both the overall measure and the core without food or energy measure both hit the target, a rare double. In China, their equity markets closed down sharply again yesterday, down 2.2%, making the cumulative fall more than 20% and moving them into a bear market. China is reported to be mulling a halving of its taxes on new cars as a way of stimulating this sagging economy. And staying in China, it is clear now that authorities are starting to hard target individuals who are avoiding their currency control limits. It had been a porous restraint essentially enforced on companies up until now, but the limits have gotten teeth for individuals who are trying to move funds out of the country. In Germany, Angela Merkel has quit from a key party position that's probably signalling that her time as German Chancellor is about to end. Investment banker Morgan Stanley has released a new report calculating the household deleveraging risk indicator for 10 developed countries, one of them New Zealand. That identifies modest risks for us, but high ones for Australia and Canada, as well as Sweden and Norway. The score for New Zealand is benign, while that for chart-topping Australia is a serious concern to these analysts. We struggle with structural vulnerabilities, but are okay on the other stress indicators that others are facing. In London, 3-month Libor has reached 2.5%, which is the highest level in a decade. It is a key wholesale rate that has started climbing again in the past 6 weeks. It is a market shift our wholesale rates won't be able to avoid in the medium term. US Treasury 10-year yield has turned back up a little, is now at 3.10%, but their 210 curve is still at 27 basis points. Gold is at $1,225 an ounce, a fall of $8 overnight. And US oil prices are a little softer today, just under $67.50 a barrel, but the Brent benchmark is still at $77.50 a barrel. Russia has said it will keep its deliveries high in the intermediate future. And the Kiwi dollar is starting today little changed at 65.3 US cents. On the cross rates, we're at 92.4 Aussie cents and 57.3 Euro cents. That puts the TWI at 69.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.